As IMF warns of economic slowdown, Canada's labour market could be critical buffer. The International Monetary Fund's (IMF) World Outlook is offering a chilly winter forecast. Winter 2022 will be challenging. But winter 2023 will likely be worse, says Pierre-Olivier Gourinchas, the chief economist for the IMF. And Gaviola has more. Canada will fare better in the year ahead than some other global economies amid dire warnings Tuesday from the International Monetary Fund, IMF, about a looming downturn, according to economists who spoke to News World CH. The IMF revised down its world economic outlook on Tuesday, citing a combination of shocks that would stall major economies.
At 3.2%, while our projection for 2023 is lowered to 2.7%. 0.2 percentage points lower than the July forecast. The 2023 slowdown will be broad-based, with countries accounting for a third of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come,
GDP growth
and for many
next year
people,
is expected
2023
to slow
will
to
feel like a
2.7%
recession.
compared to the 2.9% forecast in July, the IMF said, as higher interest rates weigh on the US economy. Europe struggles with spiking gas prices and China contends with continued COVID-19 lockdowns and a weakening property sector. Canada's GDP growth will slow to 1.5% next year, down 0.3 percentage points from the summer's forecasts, the IMF forecasts. In short, the worst is yet to come, and for many people, 2023 will feel like a recession, said IMF chief economist Pierre-Olivier Gourinchas in a statement Tuesday. Will Canada hit a recession? Pedro Antunes, chief economist of the Conference Board of Canada, told Global News on Tuesday that the IMF's revised projections showing a more pronounced slowdown are not necessarily bad news. The forecast for 2.7% global economic growth next year is only slightly down from the typical 3% annual growth, Antunes notes, and points to the early success of tightening cycles from the Bank of Canada and its central bank counterparts globally. Despite all of the dire warnings that we're hearing in that IMF report, I think what it's telling us is, their baseline outlook is for this kind of successful monetary policy, soft landing. And we think for Canada, that means still positive growth, Antunes says. He added that Canada is definitely sensitive to economic headwinds beyond its borders, especially any disruption from the United States, the nation's largest trading partner. Global fears of a recession are among the forces pushing up the value of the US dollar, Antunes says, as investors seek refuge in the reliable greenback that's driving the Canadian dollar down by comparison, he says, making imports from south of the border more expensive for consumers in turn. While Antunes predicts consumer spending will be soft for the next few quarters amid the weak loonie and rising interest rates dampening demand, he does not at this point expect Canada to fall into recession, traditionally defined as 2 consecutive quarters of negative growth. Antunes says that if global inflationary pressures continue to abate, as the IMF predicts, the Bank of Canada will be able to pause its interest rate hikes next year and allow the higher cost of borrowing to slow growth without entirely snuffing it out.